Hey everybody, we're in FreightWaves. It's Monday. It's the first Monday in December. So there's obviously a lot going on in the freight world. There's a lot going on in e-commerce that's impacting a lot of things in the supply chain. But something happened over this past weekend that we've been talking a lot about today. So I want to get together with our editorial team and the market experts to talk a little bit about what the tariffs and the things and the agreements that have happened in tariffs have impacted and are looking at impacting in the supply chain today. So JP, why don't you give us a little bit of the talk that's going on in here inside FreightWaves today about what happened over the weekend in tariffs?
So at the G20 summit in Argentina, President Trump and China's President Xi basically decided that we weren't going to implement the January 1st tariffs, raising duties on Chinese imports from 10% to 25%. Not going to do that. Going to give a 90-day waiver. And so what's interesting is seeing how the maritime rates from China to the west and east coast of America have been affected. If you look at this chart, you can see that not only did the east coast come down a lot, but so did the west coast, and the spread is increasing even more. It's something we didn't expect. We've heard anecdotes. We've heard some conflicting information about the Trans-Pacific lane. Basically, we know that Maersk and Mediterranean Shipping Company are removing capacity, but we've also heard that they're being really aggressive on their prices in a kind of a market share play. So stay tuned. It's kind of. I mean,
yeah,
what do you think about this?
No, it's going to be really interesting to see what happens moving forward, especially past the January 1st deadline. One of the things that tends to happen this time of year, everything kind of slowly, gradually winds down, especially coming off into the ports. Because holiday retail is now no longer a thing. Moving into January, things kind of slow down, but not dramatically, and then you have Chinese New Year and all this kind of stuff that keeps port volume kind of elevated, and then it just drops off. So it's going to be interesting to see if this big jump that we saw here on the West Coast that kind of stayed elevated longer than it should have, at least historically, if that's going to ramp back up and have the same kind of impact going into the first 90 days of 2019.
And we're really going to see like how much the tariff pull forward really affected Q1 volumes. Like, well, if they've already moved so much onto American shores already, there may not be a whole lot left over for Q1.
That's what we thought had happened before, is that we had this pull forward significant. So, when do we think we'll see whether that was true and what happened over the weekend actually has any impact on that?
I don't think we're going to see it for a long period of time.
Right.
I mean, especially after January 1st.
Right. It's going to be mid-January before you get a sense of.
I think before Chinese New Year, when it kicks off, I think that's when we'll really know something.
Okay.
Significantly.
It's like February 5th this year?
Yeah, I think it's a week or two sooner than it was last year.
Yep.
I'm going to turn a little bit. We've been writing a fair amount about, we talk a lot about here at FreightWaves about the digitization of the entire supply chain. We've done a lot of writing around the digital freight brokers, and there's so much money that's been invested, venture capital, private equity have gone into a number of companies. We've talked a lot about some of the publicly traded companies who've done very well in this market, like a JB Hunt. But we wrote last week, I think, JP, around a couple of the largest providers in Convoy and Uber Freight coming out with improvements and broadening of their applications. You want to talk a little bit about what we've been seeing and what we think's going on?
Yeah. So actually, our story came out this morning, but last Thursday, Uber Freight and Convoy both launched new data-driven products aimed at shippers on the same day. And one of the ones that we were most intrigued by is Uber Freight's Lane Explorer, where they actually give market data-based rates to shippers 14 days out, guaranteeing them. And so, our immediate thought was, wow, that seems really risky. They think they've outsmarted, some of the most volatile markets in the world. And so, we created this chart that Strickland can take you through, showing some of the most volatile 2-week periods this year on. And these are the national prices.
Yeah,
these are probably going to be the least volatile.
Yeah, these are going to be the smoothest because you're going to have the most information in it. So it's each market is kind of each lane's going to hedge each other. So as one market gets more expensive, another one gets cheaper, they're going to kind of average out and level it out. So What we pulled up here is the DAT Van Freight Rate Index. This was developed for freight futures. So what it's telling you is giving you a national average rate, and these circles that I have here on each side are representing the same period of time over the last year. Now this one's a little bit bigger, a little bit longer into December. November would extend here, but you can see that it's far less volatile last year as it kind of goes up and kind of gently kind of climbs up over a period of time. This year, and some of these trend lines that I have kind of illustrate that. It drops 7.5% one day, goes up 7.5% another day. Wildly erratic. I think the average movement per day in cents per mile was something over 6 cents this year in that period of time, and last year it was like right around 3.
Right, and so we're seeing increasing volatility, which means that Uber Freight has an even tougher job predicting these rates ahead of time. I mean, if they a lot of these seasonal surges happen so quickly. And they can vary by 15 days year to year. So it's like if they're 1 week off of that surge, they're massively exposed.
No, and that's what we're illustrating right here with this mess of lines right here on the screen. So you can see that during this wild upscaling that happened this summer, you're talking about a 10.5% jump over the course of, let's see, what is that, about 37 days. So what these companies are attempting to do is lock in a rate as this is trending up. So I don't know what their algorithms are or whatnot, but it's an extremely difficult job to say, okay, sometime in May, we're going to turn up about 10% in a given day. And then be totally hedged to that.
We're going to go up
in a given day in an index that is covering the entire U.S.
The entire country.
So that if I'm looking at an individual lane, where you don't have as much scale,
LA to Dallas,
right? You don't have as much scale. You're going to be seeing even greater levels of volatility, which is going to make the algorithm even more challenged to come up with a directional suggestion.
And so my thought, talking to the product manager at Uber Freight, I was like, okay, well, if you're guaranteeing capacity with rates this far out, surely the way you protect yourself is by charging a premium for the service, right? Like, guarantee capacity, we want to be the last person you call, we're going to charge more than everyone else. And he said no. He said we want to actually be competitive. We want to be right in the middle of where the rates are. We want to, it's all about a probabilistic bet that we can get a truck to show up on a certain day in a certain market at a certain rate. And so, they want to, that's the fascinating part, is that they want this to be competitive and they want it to be locked in 2 weeks in advance.
No, and they're going to have to be consistent with their service too. Otherwise, I mean, people aren't going to use it. So you can't not guarantee it moving forward. So I think it's going
to be super interesting. I mean, I anticipate at least 1 month of absolute carnage for them next year.
Well, you can see it right here. I mean, what are they going to do when they're saying, okay, this is going to be the bottom and we're going to start guaranteeing it? Because they're guaranteeing a rate out over here from this point in time where the market is relatively flat. They're going to lose money right here. So then they finally figured out and it starts drifting up. They're going to continue this trend line past the point where they need to necessarily. So then they're not going to be competitive.
So they're going to understand when that market turns, when's the dip going to come? It's going to be a huge challenge.
And you can look year over year. There's no algorithm that says seasonality, because last October was way different than this October.
Right. So that's kind of what we've been talking about in the office today. I mean, just data, technological innovations, market volatility, and basically the casino that Uber Freight's going to be running with their new algorithms.
All right, thanks guys. See you tomorrow.